One of the things that people often ask is, how much time do you need to dedicate to trading? And you certainly need to dedicate time to education, right? You need to actually learn how the markets work, how things like options work, how things like futures work, just the workings of everything. And that takes time. That takes hundreds of hours, thousands of hours. You got to do some research, right? You got to do some reading, read some books, watch videos from responsible content creators that are giving you reasonably good information. And of course, it does take some experience. You actually do have to start trading. And the more you trade, the more you actually learn how things work. But realistically, once you kind of know how things work, trading doesn't take any real time. Like this kind of options trading we're doing here, I could easily dedicate 30 minutes a day and be just fine. 30 minutes a day. Let's assume it's a normal work week as far as trading hours, a 5-day week. You're looking at 2.5, maybe 3 hours a week. That, if that's all I had, I could easily make that work. Especially if I could be there at open. It's really all about that first 30 minutes to an hour of the market open, because that's when most of the action happens in the market. Like if you can be at a computer for the first 30 minutes to the first hour of market open each day, you're good. I don't worry about the rest of the day. When I leave here in a few minutes, once we're done with this chat, I walk away. I will occasionally on my phone, I will pull up the SPY chart and the Qs chart just to see what the S&P and the NASDAQ, the overall market, is doing. I'm not checking individual positions the rest of the day. Maybe late in the afternoon, like right before the closing bell, I might log back into Tasty just to see if any of my positions, if something drastically changed. But I'm not watching this all day, every day. I don't want to do that. That's not fun. And that's what unfortunately, what a lot of traders imagine trading to be. They imagine it's the guy that's got a bajillion monitors in front of him. He's monitoring like 27 different stock positions, and he's in and out of trades lightning fast. He's like a computer hacker from a Hollywood movie, and it's nothing like that. And even if it was like that, is that really how you would want to trade? Some people do. Some people imagine that would be such a cool life. But if you really stop and think about it, if that became how trading really was, that would be such a bad experience. Like you would get burned out so quickly doing that. Trading should be about saving time more than making money. I mean, you want to make money, but it's also about make money in a reasonably short amount of time. I don't have to dedicate much time to this, and then go about living life, doing the things you want to do in life.
If you don't mind asking, you only talk about trading. How about investing for the long term? What is your philosophy or your strategy?
I think for 95% of the people that are interested in trading, they would be better off if they just simply passively invest. This is what I think. I think a lot of people, I think a lot of people, trading is great if you want to dedicate some time to learning. And that's the thing. You have to dedicate some time to learning, and you also have to gain experience. Like it's, now once you have the experience, you've been trading for a while, this trading stuff is actually quite easy. And it's, you can make a little money, not take a whole lot of risk. Once you learn how to manage your risk, actively trading is very similar to passive investing. For example, if all you do is buy shares of SPY, well, how is that any different than me constantly selling puts and selling put credit spreads in SPY? We're both essentially doing the same thing. You're long the SPY. I'm long the SPY. You're doing it with long stock. I'm doing it with short options, but it's the same trade. And I'm doing it over and over again. Well, you're just passively holding shares, right? You're just in a position that's a forever position. Well, I'm kind of in a forever position. If I'm doing campaign trading, if I'm selling a new put in SPY every month or put credit spread in SPY every week, whatever it happens to be, that's a forever position. We're actually doing the same thing. We're just going about it in slightly different ways. Now, for most people, just because it's a safer, I guess, less time commitment, less knowledge commitment as well, as far as having to learn how options work and things, most people would be better served just go buy some shares of SPY and sit on it. Every month, try to add a few more shares of SPY, whatever, just keep building that portfolio of SPY. For most people, that's where they would be better off. Now, when I say 95% of people would be better off doing that, what about the other 5%? Well, 5% of people would never be satisfied just accepting the market returns. And that's kind of, my thinking is I never want to do what anybody can do. Literally anybody can just go buy shares of SPY and accept the S&P 500 returns. That's available to every single person on the planet. I want to beat the market.
These last 2 years.
Yeah.
Especially
yeah.
these last 2 years.
I mean, 2023.
What was SPY?
Yeah. Well, 2023 SPY was up 30-something%.
Yeah.
The NASDAQ was up like 45%. Like if you'd invested in the Qs in 2023 and just sat on it, you would have killed it. Now, I traded options all of 2023. I made a 65% return. Now, I beat the market. I'm happy about that. Now, was I guaranteed to do that? No, I could have very easily underperformed the market, or I could have just made exactly the market return. I'm not saying that I'm some kind of genius trader, right? Sometimes I obviously have some losing trades. But the point is, for me, I could do the same thing and just guarantee myself the market returns. Just invest in SPY or the Qs or a little bit of both, and just, hey, if the market's up 15% next year, I make 15%. Well, that's not the way I'm wired. It's the way a lot of people are not wired that way. Like if the market's up 15% next year, I want to make 20%, right? I want to do a little better. And that's where, is it worth my time to try to squeeze out a few extra percentage points? Well, for me, it is. I like trading. I enjoy it. For some people, especially if they don't have the time, maybe they work a full-time job during market hours, for example, they can't actually trade during regular stock market hours. There's a lot of factors that come into play where, again, for most people, I think passive investing is where they need to be. But for some people, active trading is probably where they want to be. In the end, I don't think if you're actively trading in a responsible way, it kind of becomes very similar to passive investing in my mind. That's something that you don't hear a lot of like trading gurus talk about, because especially the fake trading gurus, they try to make this stuff sound very exciting. You're going to make a bajillion dollars. You're going to have Lamborghinis and hookers and cocaine, and it's like, no, it's not like that at all. For the most part,
that's not the real life.
For the most part, reality. Again, I'm making the same return that the guy just passively invested in SPY is making. I might make a little bit better, but for the most part, we're doing the same thing. He's holding shares. And I'm just selling puts constantly, but it's essentially like I'm long shares. I hope that made sense.
Yeah,
I don't know if that answer actually was the answer you were looking for as far as the question. It was kind of a very general question.
I anticipated your answer because
because you said as far as my thoughts on passive investing, my thoughts is everybody should be doing it. And my other thought on it is people imagine you can either passively invest or actively trade. That is wrong. Right. The best way to do it is to do both. Why not have your shares of SPY and then sell some covered calls against it? There's nothing preventing you from doing, or selling some puts to get more shares. If you're one of those people that are going to add more shares that month, well, instead of just buying the shares outright, sell a put. Maybe sell a put and a call around your shares. You can do a lot. Well, you guys got to see what I was doing with NVIDIA wheeling for those 6 months. I was constantly selling puts and calls around shares of NVIDIA. Imagine that had been SPY. That's the kind of thing you could do. You still have your shares, but you're selling options around it.
Yeah. Now you made a good case. I just saw a video from SMB where they do SPY cover call, a SPY short put and cover call, and they compare it. I mean, if you have like 50K, and you go to a bank for a secure deposit, they give you like 4 or 5%. And they made the comparison with the same 50. You do a SPY campaign for 1 year. Well, you can gain like 14 or 15%. But
Yeah.
you have to be active. Active. Yeah.
Yeah, for anybody that's traded at all, especially anybody that is familiar with options, you'd never go to the bank and get a CD.
Yeah.
You just never do it, because there are there are actual risk-free trades I could take right now where I would guarantee myself 4 to 5% return with zero risk. Absolutely no risk.
Yeah.
Why would I go to the bank for
Yeah.
something?
That's way they demonstrate. Yeah. When
Yeah,
you
because
start learning
I
option.
could do a box spread on the SPX, a completely safe trade that has absolutely no risk, and guarantee myself about a 4% return over the next year, if that's all I wanted. Now, for me, a 4% return, that doesn't excite me. I would never put on that kind of trade, but I could do it if I wanted. That's the point. I could certainly do it. I could go buy a bond. I could go buy some T-bills, risk-free, guaranteed return. But again, that doesn't 4 to 5% doesn't excite me. I'm not getting out of bed for that kind of return. Again, I'm one of those 5%. I've got to beat the risk-free rate. I've got to beat the market. I got to do a little better.
Yeah, for sure. When you have the knowledge, yes.
And I may not always come out ahead. There may be some times I underperform. But the point for me is I'm just wired where I've got to try, right? I've got to be one of those people. I've got to try it.
Yeah, for sure. This is how we learn.
Yeah, but I would never tell anybody that wanted to passively invest in SPY or the Qs or something like that not to. I absolutely sink all the money you can into that stuff. And for those that maybe if you're a little older, you've got a large sum of money, you're close to retirement, and you say, hey, you know what? I'm just going to buy a bunch of bonds. Well, hell yeah, go do it. I'm never going to tell anybody not to do that stuff. Like you're going to make money, take it. For me, I'm a little younger. I take a little bit more risk because why not?
Yeah, for sure. It depends on your age. You have a strategy based on your age. Yes.
Yeah, a lot of it too is how much money you've already accumulated. Like if you've already accumulated, say, $10 million, then you've pretty much already got things straight as far as retirement for you, left some money behind for future generations. If you got kids, grandkids, you would never put an extreme amount of risk out there if you've already built that kind of money. Like that's the kind of wealth where you put that into safe investments. Where if you got $50,000, well, you're going to take some chances with that, right? That's not necessarily life-changing amount of money, right? You're not retiring on it anyway. You got to take a little chance. The smaller account you have, the more risk you're going to take. Once you start growing that account, start taking a little bit less risk, and that's when you start thinking about protecting your money more than making money.
Yeah, for sure. You have to protect your gain. Yeah.